Yukon Huang is the former World Bank director for China, and he joins us now from Washington. Great to have you on the show today.
Thank you very much, Allison.
Let's start with China's zero tolerance policy when it comes to COVID. It's really come to define China's pandemic response. And now, as you heard, the IMF says it could cause fresh damage to supply chains, impacting global growth. How much longer do you think can China keep up this strategy?
I think China's COVID policy is evolving. As you mentioned, it was going with what I call zero tolerance. It's moving to what I would call rapid containment or rapid cleansing. If you look what's been happening over the last month or two, you had this breakout in Xi'an, a city of 13 million. Over 2 to 3 weeks, they went through a lockdown. They more or less eliminated the problem in Xi'an. Then it showed up in Tianjin. Now it's showing up in Beijing, various cities in Henan province. And instead of full lockdowns, what you're seeing is more isolated lockdowns of districts and areas. China has a system. They can actually test as many as 1 million or 2 million people in 12 hours. So what they're trying to do is hit these pockets. And the question is whether or not further down the year, maybe after the Olympics this fall, perhaps they'll loosen up a bit, but probably not much earlier.
But this is expected to hit, it's hitting currently their growth now, and that it will continue to hit growth globally.
It does have a negative effect. If you look at the growth rate in the last quarter of last year, it fell down to 4%. And it was 5 or 6% in the middle of the year, it went down to 4%. At least 0.5% or maybe a full percentage point of that decline from previous growth was because of the lockdowns last year, the interruptions in the supply chains. But there are many other things that are also affecting the growth rate. Fuel shortages, the property market bubble, the collapsing local finances, preventing provinces from investing. China's aging population just hit a record low in terms of birth rates. All these things are coming together. So the question this current fiscal year, this current year, is not whether growth may be as high as 4.8 or even 5. There's some who think that the growth rate may even fall down to 3 to 4. And the uncertainties around the pandemic are certainly one important factor.
Yeah, we have seen Beijing crack down on business, fintech, full-scale crackdown on cryptocurrency, both trading and mining. How much do you think those crackdowns have impacted China's overall growth?
Well, that's had a very significant effect. Stock valuations for some of these major players like Alibaba, Tencent, they've fallen dramatically. And many big conglomerates have taken a big hit. The private sector is nervous. There has been a slowdown in terms of investments in the equity markets because of this. At the same time, China is keen on steering more investment into high-tech activities, particularly in manufacturing and strategic industries. They have something, for example, called local champions, little giants. Some 5,000 companies have been identified over the last year or two for new investments. And these are in the high-tech area. But they're not in the digital services sector, which has taken the brunt of the government's retrenchment. And the question is whether or not innovation growth in these new activities will be strong enough to overcome what I call the hindering and decline in the major digital giants.
Yeah, you wrote a piece saying that both China and the U.S. get it wrong when it comes to economic policy and trade. In fact, you wrote a piece about this saying, giving the reasons why. Walk us through that.
Well, here in the United States, we worry about jobs. We worry about jobs in manufacturing. And that's a big plank in the Biden's program as it was in Trump's. But if you think about it, manufacturing only accounts for 8% of employment in the U.S. 90% of the jobs in the U.S. is in services. And the really important point, high-value services, that drives the U.S. economy. China's also been evolving. If you go back 7, 8 years ago, manufacturing accounted for a large part of the growth, a large part of the job creation. And today, again, it's true in China. Services are becoming more important. When you look at companies like Alibaba, Tencent, ByteDance, these ride-hailing companies, this is what caused what I call substantial growth, efficiency gains over the last 3 or 4 or 5 years. So when China hits these kinds of digital service giants, it's also making a mistake because the manufacturing sector, although there are parts of it that's very dynamic, it's unlikely to provide the growth impetus in the future as it did in the past in China also.
I want to quickly ask you about Taiwan. You know, Taiwan needs China for economic prosperity because of trade, but we've seen tensions really grow, especially over the past few days. China sent dozens of warplanes into Taiwan's air defense identification zone. How do you think this is going to play out?
Well, the rhetoric is certainly heated up in everybody's side in Taiwan, mainland, in the U.S. So I think the hope is that these tensions will curb or come down. But there's a lot of problems going on here. China depends a lot on the semiconductors coming out of Taiwan, as the global economy does. So you have this company called TSMC. They produce most of the high-value chips, and that's in demand not just in China, but in demand in the United States and Europe. So any disruption, any real problem that threatens what I call the security of Taiwan will have a major global effect on supply chains.